All right, so this is all hands on deck morning. We had a nice rally yesterday, and then we came out of the gate today testing this 43.80, and then boom, all the way down to 43.50, testing the 43.50. 43.50 has long been one of my benchmarks for a rally, because here is 43.50 right here. Acted as a resistance, pulled back, and then that's when it started to rally back up. And I thought at 43.50, once we overtake this 43.50, then there's going to be a little resistance, but then eventually we'll retake these two highs right here. Now we're right at that inflection point where the level can be a support, which means that it's not going to fall below it. So see, it's fighting 43.50 right there, fighting not to fall below it. But if it acts as a support, then it won't go much below the 43.50, and it'll keep upswinging. And that's where we're at right now. Is the market is fighting. The bulls and the bears are fighting down here, trying to keep this 43.50 as support. If the bears win and this breaks to the downside, next week may get incredibly ugly. Because we may eliminate this bull market right here. So see how it hit the low right here, and then we got a lower low or a higher low, and then another higher low, and then no low. We haven't seen a low yet, and then we have a higher high, and then a higher high. And this is a bull market right here, and once we overtake this and stay above this, then these two points are left. However, what could ruin the market is if the 43.50 doesn't hold up and we drop down to one of these levels here. That would not be good. So that's where we're at right now with the S&P. I use SPX, and also to further solidify what's going on, let's look at a Dow stock, WBA. WBA right there. So let's look at this Dow stock. Let's look at trading it. So this expires today, okay, in a few hours. Now look at these spreads. Look at how wide these spreads are, 14 and 18, 49 and 55. With the volume of WBA, these spreads should not be this far apart, especially on a one-day expiration. That means nobody knows where we're going to end up. That means we don't know whether we're going to be positive or negative at the end of the day. We're down 1%, but like yesterday, we started down here and we ended up here. Could be the same today, because if that 43.50 on the S&P acts like a support, that means there should be buying later in the day. So I can find some trades right now with the thesis that it's going to act as a support. The 43.50 is going to act like a support, and we're going to go, the buying is going to come in. But that could really, really get me stuck with a lot of shares going into next week. And if it breaks through that support and it falls down and then it turns into a resistance, I'm going to be stuck with a lot of depreciated stock with not much covered call potential for next week. So that is the danger in a market like this at key levels. So I'm going to hold tight for a second, and I'm going to see where this level ends up, see if some buying comes in, and then I'll swing trade it to the upside. It's not looking good at the moment. I don't see much bears coming in or bulls coming in. So yeah, this is an all hands on deck morning. You just got to wait this one out. I am going to make some trades. I just don't know if they're going to be bullish or bearish trades.